Well, still in Nigeria, the National Petroleum Company says it's taken a $3 billion emergency loan from the Afrieximbank. That money will be used for crude oil repayment, and it should help the government stabilize the country's volatile foreign exchange market, at least in the interim. Nigeria has been battling acute foreign exchange shortages, and that's resulted in a steep depreciation of the naira. It's approaching 1,000 naira to the dollar in the parallel market, and that in turn has pushed up the cost of living. Here's Deji Bademosi with the details.
The emergency loan facility comes after Nigeria's local currency approached the 1,000 naira to the dollar mark at the unofficial foreign exchange market the previous week. The Nigerian National Petroleum Company Limited is expected to use the funds to make advance payments in taxes and royalties, providing the government with the much-needed forex to defend the naira. The loan will be repaid in installments with a fraction of the country's crude oil production.
NNPC has the capacity to repay, especially when you look at the level at which oil price is now. I think it should not be such a major problem, because when you have a liquidity crisis, there are a number of other options, but this is one of the best options that any country can have. There is the option of going to the IMF, which is what Ghana has been trying to do. It took them almost a year. The other option is to go to the commercial debt market, that's the Euro bond market, to go and raise bonds. That again is a tall order, especially at a time like this. So we are lucky that we have this company that has the credibility and the fundamentals to be able to, raise this kind of facility to support the shortfall in our liquidity.
Crude sales account for the bulk of Nigeria's forex earnings, but massive oil theft, sabotage, and lack of investments in the oil industry have led to a significant drop in the country's oil production level. And that translates to poor forex earnings, leaving the government with an acute shortage of forex to meet rising demand. The $3 billion loan is expected to bring some respite to the local currency.
It's important that we also properly monitor the foreign exchange market, because if the system is too loose, within 2 months, even this $3 billion can evaporate into the hands of speculators. So the framework for proper surveillance has to exist in the market to ensure that we don't open up the market to all this speculative assault.
Nigeria's central bank announced the unification of the various segments of the country's forex market in June as part of measures to ensure transparency in the forex market and win investors' confidence. But since then, the local currency has been on a downward spiral, prompting President Bola Tinubu to ask the country's central bank to step in and address the situation.
Mr. President was very concerned, or is very, very concerned, about some of the goings-on in the foreign exchange market. And one of the things we discussed were what could be done to stabilize and what could be done to improve the liquidity in the market and also the goings-on in the various other markets, including the parallel markets. He is concerned about its impact on the average person, since unfortunately a lot of activities that we do, which are purely local, are still referenced to exchange rates in the parallel market.
Since the meeting between the president and the Afrieximbank governor early this week, the naira has recorded some recovery, and with the availability of the $3 billion bank loan, that recovery is expected to continue at least for the short term. But analysts say the lasting solution is for the government to improve the country's oil production levels to enhance its forex earnings. Deji Bademosi, CGTN, Lagos, Nigeria.